Hello guys, welcome to the Trading Parrot. I'm gonna cover the general markets, including some analysis on AMD, which yesterday did a massive 35% upside in a single day. This is how the market could close yesterday, with Nvidia minus 1%, Apple in the negative. Tesla did a decent 5.45%. Microsoft, Meta, and Google erasing some of the downside that we had from the day before. It is AMD that is 23.71% in the upside right here inside the electronic technology. Pretty much this is the way it looked. From $164, it pushed into a $224. It seems that everything that is touched by OpenAI has a similar effect. Whatever OpenAI needs to use for their hardware or data centers, it pumps like crazy. AMD is on track for its biggest single-day market cap gain in history. Pretty much this looks like a low-cap crypto, no one knows coin pumping within a single day. We'll do some TA on this. Particularly, we have a hive signal and a massive gap, and we are trading right at the previous support. So we'll see what happens if that breaks. I want to give you some insights on the RSI later in the video. But first, let's cover some tweets and let's see what's going on out there. Everybody's talking about gold having touched that $4,000 mark for the first time in history. Here we can see that together with Bitcoin, it seems that they are the best performers in the last 12 months. Nothing comes even close, with the Nasdaq and S&P around the 25%, Bitcoin at the 100%, and gold around the 50%. I'm surprised that Peter is not having a meltdown or anything. Instead of that, he's blaming the Fed for all of this. Gold is at a new record high, trading about 3,975. That's less than $25 away from 4,000. This is a clear warning that current Fed policy is wrong. The Fed needs to reserve course immediately, raise interest rates between meetings, and signal that more rate hikes are coming. Yesterday, I saw a lot of posts on crypto Twitter all about the yields. For weeks, we've been following the Japanese 10-year yield to anticipate moves in the market, and it seems that the Japanese one is leading the rest of the pack. We saw how many yields in Europe markets were pushing over 1% for the day. Semiconductor stocks hit most overbought level in 8 years. And obviously, this is the AI side of it, having a strong influence on the need for semiconductors. I'm definitely sure that Nvidia, AMD, and all that group is definitely helping with this. RSI hitting almost 83. Japan, a great country with public finances destroyed by Keynesianism. I don't know what is that. Spending out of control, record debt, yields soar, currency plummets. All of this is the perfect narrative for Bitcoin and gold, definitely outperforming currently the dollar. We'll cover the dollar to see how that breakout is coming in place. I'm pretty sure that not many people are looking at that still. And before we go into some important macro news, I remind you that if you want to trade on an excellent broker, you can have a look at VT Markets. The link is in the description. If you use that link, you get 100% welcome bonus. Trade Forex, stocks, indices, gold, anything, commodities, you name it. Even crypto, you can deposit in crypto directly and withdraw in crypto at the same time. So in the past 24 hours, let's see what comes in. Gold safe haven bid. Of course, there is an massive advertising campaign from gold by hitting $4,000. This signals risk aversion and easier policy expectations. Yesterday, we have fresh hawkish tone coming from the Fed yesterday in the afternoon. Kansas City Fed's Smith rates appropriately calibrated warns against easing too much. We've seen the probabilities of rate cuts in October now to have a 7.5 chances of no hike. This could come from here, and this has a bearish tone to it, a 4 out of 10, and it could be the reason why Bitcoin is slightly slowing down, although the support is very strong, as you probably saw when you watched my BTC video separately. We need to look into the pre-market prices to see if it's already affecting futures. Global risk mood mixed today. Stocks and bonds steadied. Political noise capping optimism. So we were very optimistic yesterday, but today there is a little bit of slowdown. I wouldn't say it's a disaster at all, but just a slowdown. US jobless claims updated yesterday. Let's have a look at this. We got unemployment claims increased slightly. Lays off remains low. Shutdown halts official data. Fed may advance rate cut due to incomplete data, economist says. And of course, we continue with geopolitical tensions. US rate cut odds still high into October meeting, even though we have that 7.5%. That is bullish. Inflation nowcast refreshed yesterday. Cleveland Fed nowcast September CPI 2.99 year-on-year, October 2.87 updated in October. There's no new prints on CPI PPI, of course. So let's have a quick look at AMD. We have an all-time high at 2.2685 that happened in March. And today on the news of OpenAI, price jumped all the way from 163 from within this bull flag all the way into the previous all-time high. It tapped the all-time high and it retraced back into 204. That level is very important, and AMD has the potential to flip that level into support. Let's see how we close this week. It will be really bullish to close above $206. That is the highest closing price on the weekly, and it could signal that we are actually going to resume. From the point of view of RSI, it kind of disagrees with that because we have already a breakdown in a hive signal with bearish divergences in here, and now we gap all the way into here, and believe it or not, this is in the context already of a channel down. But RSI has a lot to say here. If it retraces below, let's say it closes the week around 70, that will be already a channel down after a breakdown. So even this new high with the gap and everything will be signaling that the momentum now is to the downside. So watch out with that potential. How can we invalidate that? We can, of course, this week close at a higher high relative to this. Very rare, still within a revenge rally, but maybe that could build up momentum and continue into higher highs. My read is, let's wait for candle close. This was really crazy. A first initial conservative signal bearish that you should monitor is if this guy starts creeping into closing the gap. Being below 206, of course, is below that. That is the first line of defense for the bulls. But for the bulls, to be fair, they could come back into 179. And for price action, that could still continue to the upside. So I will monitor two things. What happens here and what happens there to make conclusions. As I say, RSI already states we are in a channel to the downside, but let's remember, momentum to the downside doesn't necessarily mean not being able to push higher at the cost of bearish divergences. Let's look at some indices. As I say, dollar continues with the strength. Potentially, it could close this week above the 21 weekly with an RSI pointing into the median. We need to see what happens when we meet to resistance. In here, being an ITA is positive. We're getting very close to form a neckline for a double bottom on top of support. Gold remains at the highs of 3,957, very close to $4,000. And this candle starts from 79 from the resistance and is currently intra-candle at 81. But if this week sees a rejection from here with a candle pointing down with a wick to the upside, that will make a lot of sense because we will have done 3 rejections in a channel to the downside after a strong breakdown. Lower highs, breakdown, channel downside, which is currently being defended by the higher lows. But if this week we close below 79, that will be bearish for gold. Closing above it, strength for gold, but the upside in terms of momentum is quite limited by putting a breakout from 80 into what? Into 100. Well, we have done 98, if that means something. No news on VIX. Still, I don't get that confirmation that we are seeing the expansion right now. But we got a high bearish signal on the Nasdaq. And on the S&P intra-candle, I see pretty much the same price as yesterday on the S&P. So no warning or red flag incoming. Russell has managed to put a close after completing the full revenge rally. It's currently trading at 70, right there at the resistance. We'll see what happens after that. Careful, because that is a call for either a small pullback. It can happen, but it's low likely that in a revenge rally we continue with a rally like that. Let's have a look at this one. For example, it broke down. Well, we never have a revenge rally in that area. But the PNR got into 76. At the moment, we are at 70. If we exclude technology from the S&P, we can see that after the breakout, we are not seeing as much as a strength compared to the S&P, which is currently already about to hit the point of revenge, which is 74 at this point. I call it like that because after you lose support, you typically come back there. That is what I call a revenge rally. Interesting that Nvidia, after putting a new high, is getting a high signal there after the breakdown in here. We'll see if Nvidia is going to slow down in here or if it's a fake call. Nvidia has a history of not respecting bearish divergences in the past, so watch out with that. Today is opening in the green. Amazon has a double top in here and is currently testing around the neckline. The neckline is 216. Pre-market we are 221. Tesla is with equal highs in here, but at a cost of a bearish potential divergence. If the price slow down at 450, we cannot really manage to keep pushing with the RSI, and we kind of get that bearish divergence again. The previous one that we print on the hive put a huge drawdown from the highs of 487 back down into 216, and I can see that we somehow respect bearish divergences on the weekly on Tesla. Not all of them, of course, but a lot more that with Nvidia that has been incredible the momentum in the past year. Palantir is also with a bearish divergence. Meta is rallying, but in the revenge rally with a bearish divergence already in place and seeing a rejection of the revenge rally area. MicroStrategy has managed to reclaim from support of $310. We could place the resistance like this and see what happens once we get into 57, which is currently priced at $395. Thanks so much for watching this video. I'll see you on the next one. Take care. Bye bye.